Martin Wong here from TradersTruthReview.com. I'm going to come to you with my video podcast for the April stock market outlook. And the title for April is going to be The Wealth of Building Secrets of the Rich. Now, the first quarter has ended a couple of days ago, and most of you would have known that we have a market closing to a new high, an all-time, I would say, the KLSC since 75. That's around what? 35 years all-time high at about 1609. And if you look back to the last 3 months, our market has made about 4% compared to an average rise in the region about 10 to 13%. Not bad, considering what we had. The KLSC had to undergo great debt crisis, Iran, and all this. But more importantly is the backdrop that we are leading into the general election. And all been said that the general election should be in June, in May, and there's a little bird that tells me now it's going to be in September. If that's the case, it's going to be in September. We still have a little bit more room. Now it's only being April. In September, that's another 5 months of bull market run. So will we see another bull market run for 5 months? That's yet to be seen. But what's more important, let me just draw your attention, is the foreign funds flows that's been coming in since January. As you can see, from the foreign funds net buying, ever since January, it's been really staying above the positive zero. Foreign funds are really buying. And over the last month of March, you see that there's actually a trend of going high. So, and 2 days ago, I just saw it on the news, and they're starting to report foreign funds are flowing in. Right, and now you can see that the foreign funds are actually reported, and you can get this daily from the Sun on the business section. So what I do as a fund manager, we actually record down the foreign funds flows, because to me the foreign fund flows are the smart money. And if you notice, on March 7 and 8, the EPF sold down heavily, and it was reported that actually there was also a sort of like, how do I put it, kind of remark that the EPF control the stock market. Whenever they sell down, the market will go through a sell-off. But however, if you look on that day, on March 7 and 8, the foreign funds were really buying. And you think of it, the EPF was selling on the March 7 to 8 because that was prior to paying the dividends that they have. I'm sure all of you who have an EPF account would have have seen a 6% credit in your EPF, a 6.5% if you have a ASN, Amanah Saham Malaysia, 6.5, right? That's what one of my clients told me, 6.5 and 6% for EPF. So as we had a good turnout last week in JB. We actually prepared a presentation, so you can check it out in there. But the whole point, what I'm trying to say in the whole scheme of things, I just want to draw an article by Kathleen Petticoat that she written on the US news in here. You can click on here, and it should take us there, hopefully. Right, there you go. It talks about the 18 best place to retire in Malaysia. Because when I was in JB, talking to a lot of the prospect as well as investors in JB, they were telling me a lot of Singaporeans are actually retiring in JB. I'm very surprised. So all the property up there have been snapped up. 50% of the property are snapped up. It's very simple. Now, if you have a HDB flat in Singapore, you're going to be renting around 2,500 to 3,000 Sing dollar. Correct. Now, if you convert that to ringgit, that's 7,000 ringgit. Maybe high side some will be around 8,000. Right. So what do? You rent a $2,000 nice, very high-end bedroom apartment condo in JB. You're still left with another 5,000 or 4,000 ringgit every month to cover it. So I happened to meet a restaurant owner, and he's telling a lot of his Singaporean friends. As a matter of fact, one of his waiter actually helped him out in his restaurant. He was there. And you know what? He's a Singaporean. And finally, I saw he drive a Mercedes C-Class CGI. And he's staying in JB. And that's what a lot of the Singaporeans do. They're very smart. So they're really retiring in JB. They rent out their HDB flat, or they rent out their flat getting about 3,000-4,000 Sing dollar. They come over to JB, they pay 2,000, and they live modestly, try to start off some sort of small business in JB or in Singapore, and yet able to drive their Mercedes around. I think that's a good thing. So my final conclusion, I think, which is quite true, there will be a lot of real development actually happening in Iskandar. That's one of the reasons why I went down and take a look at the development over there. And Singaporeans are snatching up a lot of the property there. And that's what Malaysia is actually a really good place to stay. in terms of food wise, they're not so pricey compared to KL. But on the property side, it is as high as KL. But then again, you have more choices. You got a lot of double story houses, terrace houses, bungalows, and there are a lot. And we happen to be staying at this place in Austin Hill, and you can see a lot of 3-story Superlink as well as semi-D. So they're doing very well. So now looking a bit on the Europe side, just want to talk about it. Just give you some synopsis what's happening. That the whole Europe, with compared to Malaysia in terms of rating, S&P ratings, you can see Greece is almost rated a CC. That's a high chance we default. Why I want to show you this is just to draw your attention to the debt to GDP, okay? Which means how much debt to now. Just imagine if Malaysia is earning 1 ringgit, the amount of debt that we have is about 53 cents. It's not so bad. If you compare to Japan, which is only earning 1 ringgit, but the debt issue is almost 2 ringgit and 25 cents, almost 200% in there. So there are a lot of been talks, especially from certain quarters or NGOs, saying that our debt is very high, and if you don't control our debt, we're going to go bankrupt like Greece. And also our natural reserve from the Petronas are dwindling, because currently the Petronas are contributing 30% to the government coffer. 30% of our revenue comes from Petronas, and this year, I think you have heard it before, Petronas are reducing dividend to the government. So there's a lot of issue. Where is this coming from? But having said that, another point you should know, it is in our constitution, from the economic standpoint, that government can issue bonds, right, aka money printing, for new projects. Means the Iskandar area can be financed by a lot of issuing a lot of MGS bonds, which is taken up by your EPF. So those things are happening. However, they cannot print money or cannot issue bonds to pay salary for the civil servant. That's the bottom line. So they have to get that from the income tax as well as other revenue sources, maybe from FDI flows in. So I potentially see, once the election is over, the implementation of the GST, Goods, Services and Tax, is on. I'll talk a bit more about my opinion after I've attended the EPF conference that was happening this week. It's quite interesting. Met a lot of fund managers and talk about retirement in there. I'm going to go about it since this is about retirement. Now, for those of you who have houses in Australia, you are paying almost one of the fourth most expensive homes in the world, actually. Hong Kong being the most expensive one, followed by Singapore. And the ratio in terms of income to they call it affordability, yeah, to the houses you can afford. In Hong Kong used to be around 15. Now I think it's almost touching about 18 or 20 times, which means your salary to be able to afford a home is almost 20 times. Right, compared to Malaysia, we're only about 5 times ratio. So it used to be around 2.5, meaning in terms of your salary to your homes that you can afford. But however, the sad thing is people are paying more for their homes, but the houses prices in this case reflected in Australia are really coming down. You can see in January 11, my key point is that if you're going to paying a really expensive home and prices are coming down, is this a good investment? Right, so that is why you have to be careful when you go out this country and tend to buy. And also, some of you may heard that in US now, if you buy 5 property, which is accumulated worth up to about 1 million US. I think last round was 1 million. Then someone told me it was $500,000 US. They will ultimately give you a green card. Right, that's the deal is. So you can safely bet that Bill and myself, we will retire under a tree like a coconut tree in here in Malaysia, due to a lot of good things actually happening in the country. Now, back a bit to our topic, that the rich got smarter, from modeling Rockefeller in here. I think most of you have known Bill and myself, we actually manage fund, and a lot of our principle actually come from getting into high dividend, high quality companies. The companies that is all in Malaysia. Now, this chap in here, John Rockefeller, if he's still alive today, he will be the richest man in the world, not Bill Gates, not even Warren Buffett, not Carlos Slim, who is the Mexican richest man in here. But he is, because he founded the company called Standard Oil Company, which actually spin off to a lot of companies like ExxonMobil, BHP, Chevron. And this is what he does on that days, was that he built pipelines. He built pipelines to control the oil in US, and he actually hired his own guards to control these pipelines in there. That's how he make it to be very rich. And what he does is that he invests in companies that actually pays dividend. And he has a remark in here. He says that, do you know the only thing that gives me pleasure is to see my dividend coming in. Now, coincide with what I've attended, and I see some of the stats that's giving out during the EPF conference 2012 that was organized by KWSB, which is very, very alarming, is that most people use up their EPF within the first 2 years, right? And 70% of the people use up their EPF within the first 3 years. So those kind of stats is happening. And alarmingly, and I have found out, I'd like to share with you, is 81% of people who contribute to EPF is earning less than 3,000 ringgit a month, right? And there are less than 1,000 people, in EPF that's earning more than 1 million ringgit in their EPF portfolio. That it is. So it shows you one thing. It could tend to be biased because a lot of people don't contribute in the EPF, or they have some sort of other private pension scheme. So, but those are the stats. So that as a result, government's a bit concerned about the retirement. As such, they have going to raise it to 60 years old. 60 years old. That's a new retirement is. But nothing has been concrete whether you can withdraw your money at 55 or they will postpone it to 60 years old. However, there is a plan to move from 60 years old as a retirement to 65, meaning every 4 years they will add 1 year. So at the end of the 8 year will be 62, 63 at 12 years, and so on and so forth. So that's the government update that I have. So there are possibility that the government will outsource or institute a private pension scheme for those who don't contribute EPF. And there's a lot of saying that the two big investment house, you know who they are, the biggest one in Malaysia, will probably get a pie of the EPF money in there. Whether they subcon or those things are still on the table and will be discussed within the regulation. But that's what's been talking about in here, right? So what we have, just to give you an update on our dividend paying companies. Last year we did pretty well. We were averaging about 9%. And I just did because the closing of the first quarter 2012, I'm happy to report over the last 3 months we are averaging about 4 to 5% returns for all our clients' portfolios. Some around more, some are less. Some could be around 2%, some are around 15%. So if you average them up, it's about 4 to 5% for those who had the money with us for the last, which is not too bad if you look at it. If you look at KLLCI, the return has been only 4 to 5%, and we're doing 4%. Thanks to our good stock portfolio that we had, Pat Gas, Pat Dagan, Nestle, FNN, and Tasco, which incidentally hit all-time high either this quarter or late 2011. So how do we buy them? I think you can watch this video that we did, Bill and myself, and talk about how we accumulate high dividend paying stock like FNN. And this was a classic example. I still remember I was listening to a media at that time, a sell call on the February 15 about the earnings, 62% down in FNN, and also the Thailand flood that is happening in there. I knew this was a time to, I went in and buy around $17 for some of the clients who have in FNN, and I didn't look back. Now it's already $19. At this level, if you look from terms of margin of safety at these high prices, including one of the stocks I'll talk about, there's very little. There's more likely to be downside from here, about 10 to 15% downside than upside from here. So remember, if you are a VSA investor like us, you have to accumulate stock on weakness and not on strength. Okay, so that's what we are happy now. Just have a lot of it in cash, around maybe 40 to 60% in cash. For those that we have, we'll continue to run our profit. Okay, so and for those of you who is interested to come for our main course, we are actually doing one on April 21st, 23rd. We still have a couple more seats available. Just give me a call or give Bill a call if you're interested in it. Now, I just want to give you an update on the China market outlook. This was a survey done from one of JP Morgan recently in Hong Kong last week in the Minds and Money conference. And what happened was the chairperson for the JP Morgan asked the audience if they are bearish on China. And as a matter of fact, if you read from it, none of them actually are bearish on China. Although a lot of reports in here saying China are going for a hard landing or soft landing. Even my clients, who is a dato who constantly goes to China for business. He tells me people there are spending money. There was a story he shared with me, but maybe another time I'll share with you. But bottom line is people are spending money, and I just want to draw your attention to this stocks in here, Prada, which I talk about sometime in November. I'm just going to show you the chart in November. This was the chart in Prada on the 17th November, where I talk about if you have a trade guided chart, that's what we look at. There was a lot of potential of buying, right? That was around 37, 39, this level in here. We saw potential in here. However, as part of our investment, we ignore it simply because Prada, being a growth stock, doesn't pay dividend. So we took it out from our screener, right? However, some of you who are premium subscriber wouldn't know, but they may have bought Prada. But what I like about it now, you just imagine US population around 280 to 320 millions in there, right? That's a lot of number, and they can afford based on the GDP growth. Income per capita. A little bit of background income per capita. For Malaysia, our income per capita per person is around 28,500 ringgit. If you divide it by 12, that works out something like 2,300, 2,400 ringgit per month per person in the street. So if you grab someone from the street, his average pay is only around 2,000. Now, if you go to US, we are talking about 30 to 40,000 US dollar. You convert that by $100. Now, imagine now with the growing influence that Chinese have, you have the middle class Chinese market. You're going to get about something like 300 million in there. So this middle class 300 million there, they will be devouring food, car consumption, and not forgetting luxurious products like Prada. If Prada were to come back down to around 38 and $41, grab some, but at these prices, I remember, I think today is already 51.75 Hong Kong dollars. So Prada have really shot up a lot because the middle class of Chinese, they love the Prada bag here. Okay, just for my some checklist for April 2001. Those of you who are premium subscriber would be able to see this. Like part of a